Alright, welcome back. Now, in this video, our focus is on how to trade on a single time frame. In the previous video, I taught you how to trade using the top-down approach. That is, you have to look at the weekly time frame to see what price is doing, and then you go to 4 hours time frame to take an entry in the direction of that higher time frame order flow. Now in this video, I'm going to show you how you can take trades using a single time frame. Yes, and you will still have a good win rate and you will still make profit from the market. Now, to do this, there are 2 time frames I recommend you should use for this. You should either use the 4-hour chart time frame or the daily chart time frame. Don't go below the 4 hours time frame for this model. Alright, for you to maintain that quality of trade and that good win rate, use 4 hours time frame or daily time frame. So how do you do this? Basically, it's very simple. It's follow the same entry model I taught you on break and retest. So actually using break and retest entry model for this particular model. Okay, the only difference is that we don't use weekly or higher time frame order flow to determine the direction of the market. That is, we don't need higher time frame buyers or order flow or trend to take a trade on 4 hours time frame. We just use the 4-hour time frame chart structure or order flow to take our trade. What do I mean with that? Let me explain to you. Look at this. Price came down, broke this low. Now that means that price is now bearish. Okay, then price went up, broke this high, and they close above it. Now that means that price has not turned bullish back again. Then the retest. Now this retest, since I will check if there is an imbalance inside of the retest, and there is an imbalance here. Again, I don't take trades without imbalance. So price came down to retest this old high here, and then it was bearish and touched that old high. Then it switched back to bullishness, creating a swing low. So when this candle was forming, I began to trade above the high of the previous candle. That confirmed the bullishness for me. So I will take an entry for a buy like that and a stop loss below the low of the bearish candle. And that is it. So you see. So again here, price broke this low here. It turned bearish here for me, and then it retests the imbalance here. Okay, now that changed my bias to bearishness. Now when this green candle low was broken here on this day and price began to trade below this green candle, I will take a short trade entry, stop above the green candle high, and then going for this low. But you see, this actually end in a loss. And that is all right. No model will give you 100% win rate. All right. Now price booked this high here and close above it. So now Bitcoin price is now bullish. Okay, is now bullish for me. So I want to show you live right now, a live chart now. So price is now retesting this old high here plus this imbalance here. So now I'm waiting to take a buy entry on Bitcoin. When will I enter? First, I will wait until this that is forming right now to close to forming, and that will happen in 2 hours 18 minutes. So this candle will complete its formation in 2 hours 18 minutes. Then I will wait until the next candle take out this candle high and begin to trade above it. Alright, then I will take a buy entry. My stop loss will be below this candle low that was formed. So like that. So it's quite a simple model. All you just need to do is to know your 4 hours time frame structure. Okay, market structure on 4 hours time frame or trend. What is the trend on 4 hours time frame? That is, if you are using this model on 4 hours time frame. Now, if you are using this model on daily time frame, it is the same process again as well. You just have to look for the market structure and the trend, then you trade in that direction. Let me show you an example again. Price was just bearish here, but not really clean. Went below this low here and then turned bullish when price broke this high here and closed above it. Now that confirmed for me that price is fully bullish. Now price came down to retest this high here and this imbalance. You can see that this imbalance is so clean and so smooth. Now when that happened, I'll begin to look for an entry to buy. Now what do I need to see to take a buy entry? I want to see a green candle displays and begin to trade above the high of a bearish candle. That confirmed to me that price is now bullish, and that happened with this candle here. This green candle took out the high of this bearish candle, began to trade above it. When that happened, I will not wait until this green candle close for me, because it might become a massive bullish candle, and by that time it will be too late for me to enter a buy. So just take a buy entry right there, stop below the bearish candle, and then just ride the move like this. Now my stop loss management is that for every new bullish candle that is formed, I will move my stop loss below the low of the last fully formed bullish candle. That is, once this bullish candle close for me, this one close for me, my stop loss will be moved from this low to this candle low here, like this. Now once this one also closed for me and this began to form, my stop loss moved from this low to this candle low. Why that? Is very simple. I don't want to lose any profit to the market. I'm okay with being taken out with a small profit than hoping that price will keep on going higher later and price just reverse and take me out in loss, and also I end up losing all the profit I have made from the market. So I'm not a greedy fellow. Okay, I trade what I see and I take my profit from the market once the market shows signs of reversing, and the proof of that is if the low of a previous bullish candle was taken out by price. That is, if I'm buying or I'm trading long or bullish and the low of the fully formed bullish candle was taken out by price, I'm out of the market instant. I don't wait. Is that right? if price is fully bullish, the low of bullish candles should be respected by price. Price should not take out those low. So another example again on this model, right, is this. I want to give you something that is so easy to see. You can easily spot it yourself. Okay, price. Let me even use this whole move to show you so that you can learn some things here. Price became bullish here, took out this high, and then it will trace down to this old high plus this imbalance here. Now, you can see that, right? The high of this candle was taken out here. So I've taken a buy entry, but eventually that candle closed bearish. That means I've lost this trade right there. But later again, it's just kept ranging for a while. Tap into this imbalance here. Okay, this bearish candle high was not taken out, then this low was formed, and then a swing low was formed, and then this candle high was taken out. This candle high rather taken out here. So I've taken a buy right here on this day, stop loss below this swing low that was formed, and then it has been a good profitable trade for me. Okay, now a swing high was formed here, and then price will trace back into this imbalance here plus this old high here. Okay, this bearish candle high was broken by this candle. I'll have taken a buy entry right here, and my stop loss will have been below this low. Okay, and it will have been a good profitable trade for me as well. Now, like I showed you earlier, that I trailed my stop loss below the low of the fully formed candle. Now, when this candle was forming, my stop loss have been moved to this candle low. When this one also was actually forming as well, trading above this one, my stop loss will have moved from here to the low of this candle. So when this candle is closed bearish, it will have taken me out with that small profit from here to here, and I'm okay with that. Is all right? Good. Now, there was some form of ranging here and there, and this low was broken by this candle so strong. Okay, meaning that price might want to become bearish, but there was not really good retracement until this low also was taken out by this low, and the price will trace back into this bearish imbalance. Now that will have been my place to take a sell entry. When the low of this bearish candle was broken by this one, I'll have taken a sell entry right there, stop loss above the high, and then go this move, trail my stop loss below the high. That means I'll just come out with this small profit like this, less than 1 hour, and I'm still okay with that. Okay, sometimes it will give you crazy hour like 10 hour, yes, and sometimes you only get a small hour. Okay, there is no model that deliver 100% profit every time. Okay, the second entry will have been this retracement here. Okay, and here take a sell, close with maybe break even, and then this high was taken out by this candle, close above it, small imbalance left behind, price will trace into it. I'll have taken my buy entry on this candle, stop loss below the low. Okay, and then I'll have filled my stop loss, and this candle drop that happened will have taken me out on this candle low, and I'll be okay with that. Then a second entry happened right here, this retracement, okay, to this old high to the left. You can see it. I'll actually enter on this candle. White was forming above this bearish candle. Stop loss below the low. And look at that. This one went up massively. Give me 3.6 hour. That's a cool trade. Alright. And then the low of this candle was broken by this violent move. You can see it's so violent. Then price will trace back. That means when this happened, I'm not bearish. Okay? And then price will trace back to this old low. Here. Multiple times. There was really no clean entry except when price will trace here to this imbalance plus this level here. So this high was formed and price began to trace below this, the low of this high here. I'll have taken my sell entry right there. Stop loss above this high. And then look at this one now. It delivered a 10-hour profit without ever breaking the low, the high of previous candle for a bearish sell. Okay. Now of course, normally my main focus always 4 hour. Okay, 4 hour. So I'll have come out with this move here. But if I decide to trade stop loss, so I'll come out 4 hour, then I'll still be here until this 10-hour move, and say maybe this one will have taken me out at 7 hour. So you can see that this is a very profitable model. I've tried this over the years. It works. Okay. A retracement also here, but I'll just ignore this one because of this massive profit I already had here, and just ignore this one. Then a violent move that broke this high, that shifts structure from bearishness to bullishness here and close above. Okay, now price will trace deep down into this imbalance level, this massive wide imbalance. And then I'll have take a buy entry on this candle as it was trading above this candle high, like this. Stop loss below the low of this candle and just trail my stop loss. You see, this is 2 hour, 2.4 hour trade. That is cool, not bad. Again, a retracement to this old high here. You see, you just know what the structure is, the trend is, and just keep on taking a retracement in that trend direction. I don't trade against the trend. So this is how to trade on a single time frame using just 4 hours time frame. So you can see quite a beautiful move. And that one here again as well. This one did not really deliver something massive, but at least it delivers something excellent. A good morning for the day, okay? And so price went into a ranging mode and some kind of, so I love to ignore all these ranging, something like this. I love a clean move, okay? Don't try to be superhero in trading. Focus on a clean move, clean structure that you can see with clear imbalance within that structure. And that was it here. You can see it here. Price broke above this high with clean imbalance left behind. Okay. Then price will trace. Now I've actually taken an entry on this candle here. Now this next candle actually form will have to actually take me out. Okay, so what I'll do next, I will wait again to see price trade above that down candle, that bearish candle, and up right there. So I'll have taken an entry again. This is why you don't over risk on a single trade, so that when you take a loss, it will not affect you emotional wise, and when you see a new trading opportunity, you can take that trade without thinking twice or guessing, because your loss it will not affect you because you know over risk on a single trade. So I only recommend you risking 1% maximum of your capital per trade. When we get to other risk management and position sizing, we'll talk more on this. Okay, so you can see this right there, and that is it. So beautiful. So that is it. It's such a good trading model. It's a very good trading model which I recommend for you. So it's very straightforward. For this one, you don't need a top-down approach again. You just need a single time frame of 4 hours time frame to trade from, or daily time frame. If you are so busy and you wanna have time to trade, check your trading throughout the day, then go to the next time frame, which is daily time frame. The daily time frame is also cool for this model. Okay, just that on that time frame, your frequency of trade will be very low. Say maybe 1 or 2 trades in a month on a single asset like Bitcoin, like this. So that is it. It's quite a beautiful model which I recommend you try out. Now the next example again, price was bearish, like this, bearish until this high was broken by this candle and price closed above it. That confirm price bullishness. So now check, do you have an imbalance there? Yes, here, very small imbalance, this one and another one here as well, big one below. Now which one the price retrace to? The smaller one that is very close to price. This candle will trace into it, and then once it's turned from here down, so up here, I just take it an entry right there, stop loss below that candle low, and ride them off. So it's quite a beautiful model. A pullback again here to this imbalance by this candle. Okay, price is coming down into it, then it will reverse. So this model is about trading market turning point, a swing turning point in a trend. Now this is a swing turning point here, a low and a price turn here. This cannot mark that turning point. So I take my entry right there, stop below the candle low, and then ride it up like this. So it's so straightforward. Another example again here, a retracement into an imbalance level here. It's turned again here. So I have taken a buy entry on Bitcoin on this day. Not quite much, but it is still something to make money off for that day. Okay, so this is a very beautiful model, and I don't joke with it. So go and backtest this model on your chart. Do it again and again and again. You need to backtest this model to fully gain experience with it, and have your confidence built on it. Go to your chart on TradingView like this and go and check previous price action history on this model. Document your discovery. All right, do it again and again. Practice this model on TradingView first before you start putting your money into it to trade with it. Thank you. See you in the next video.